Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Costco stock so we can determine if it's a buy or a sell. Costco operates a chain of membership-only big box retail stores. It has 848 warehouses, 584 in the US, 107 in Canada, 47 in Mexico, and the rest in 11 other countries. There are 123 million people who have a Costco membership card. The first Price Club opened in 1976. The first Costco opened up in 1983. In 1993, Costco and Price Club merged. In the early 90s, Costco and Walmart wanted to be part of Price Club, but Price Club declined Walmart's offer and accepted Costco's. In 1997, all remaining Price Club locations were rebranded as Costco. The company is headquartered in Issaquah, Washington, and was founded in 1976. Let's get started with the model. This is a large cap company, 222 billion market cap. They're trading at $500 a share, and they have 443 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had their highest free cash flow in 2020, over $6 billion. It dropped to $3.5 billion in 2022, but it's up to $5.5 billion in the trailing 12 months. Net income is the profit or loss on the income statement. It's revenue minus expenses, and that's highest in the trailing 12 months, over $6 billion. Revenue is the sales for the company, and that grew a lot from $166 billion to $234 billion. The most recent financials they reported was the 3 months ending February 2023. Their revenue is up from $52 billion in 2022 to $55 billion. $1 billion from memberships, $54 billion from sales. I'll show you a breakdown of their revenue. Of the $54 billion, $22 billion is from food and sundries, $15 billion from non-foods, because every time I go to Costco, I buy things like paper towels, toilet paper. Those are non-foods. Fresh foods, $7.4 billion, and other items, $10.2 billion. An example of this is when I get a flat tire, I go to Costco and they change my tire. $40 billion of their revenue is in the US, $7 billion in Canada, and $8 billion in all the other countries. Let's go back to the income statement. Below revenue are their expenses. $48 billion from buying the product. So when they buy the toilet paper or when they buy the eggs, that cost them $48 billion, and they charge us $54 billion. SG&A, like payroll and rent, that's $5 billion. So they have really slim margins, operating income of $1.9 billion. They spent $34 million of interest on their debt. They received $114 million of interest on their investments. They paid $500 million of taxes. So their net income is $1.5 billion, which is up from $1.3 billion. That's an earnings per share of $3.30. Last year was $2.93. They have almost exactly the same number of shares outstanding as last year. Let's look at the capital structure. $23 billion of equity, $9 billion of debt. They're 71% equity, 29% debt. Their net debt is $4.5 billion. So that means they have about $13.5 billion of cash on their balance sheet. I gave them a WACC of 7.8%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows. Past year 4, that's $154 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $138 billion. We divide that by 443 million shares. And we get a calculated stock price of $312. They're trading at $500, so they're trading at a 60% premium. It's a sell according to the model. Simply Wall Street's at $461. They're also saying they're overvalued, 9% overvalued. 22 analysts priced this stock, and the average price target is $539. The lowest $475, the highest $610. 31 analysts priced this stock, and the average price target is $548. They say it's 11% undervalued. This is where the stock has been trading the last 21 years. They had a nice steady growth for about 15 years. Then starting about 2018, it just shot way up. It hit about $600 at its peak. It did come down to about $420, $430 in the beginning of 2022. But pretty quickly when it dropped to that bottom, it went well past 500, and it's been around 500 averaging for the past year. And this has totally outperformed the S&P 500. Since 2002, the S&P 500 is up 278%. This is up almost 1,400%. And at one point, it was up about 1,700%. That's just in the past 21 years. I mean, this IPO'd, I think, in the 80s. It's probably up like 50,000%. They pay a consistent quarterly dividend and they raise it every single quarter. They're up to over $1. It's a small yield, 0.8%, which is 33% of their free cash flow, 30% of their net income. They could double their dividend to 1.6% and still afford it. There are 9 companies in the same industry as Costco, and if Costco has a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a lot on CapEx, over $4 billion, a lot less than Walmart, and a little less than Target. They have a really good debt-to-equity ratio, one of the better ones on this list. For every dollar of equity, they have 40 cents of debt. They pay a small dividend, a lot lower than the median average. They generate lots of free cash flow, second to Walmart. They're the second largest company on this list, half the size of Walmart. Their ratios aren't so great. Their price to book is a lot worse than the median average. PE also worse than the median average. Their price to free cash flow is equal to the median, better than the average. And their price to sales is equal to the average, worse than the median. They generate a ton of revenue, and they're growing more than anybody on this list. Their 5-year annual revenue growth rate is 12%. To summarize, they've been around 47 years. They're such a stable and solid company, and their employees are really happy. Year after year, they're one of the more favorite companies to work for. And they're one of my favorite stocks to invest in. But that's just my opinion. I have them trading at a 60% premium. I rank their free cash flows 7 out of 10, their revenue 8 out of 10, and their ratio is 4 to 10. So let me know what you think. Give the video a like, subscribe, or comment below. Also, if you'd like to become a member, you can click on the link in the description below. Thanks for watching.